HELOCs are getting popular, you guys, really popular. In fact, HELOC lending activity is at its highest level since 2007. So, does that mean that the HELOC is going to cause the next wave of foreclosures and cause the housing market to collapse? Let's get into it. What is up, everybody? My name's Jay Costa. Thank you so much for tuning in. I'm a real estate agent and investor here in Northern New Jersey. If you get value out of this video, please hit the like button down below. Also, let me know in the comment section what you think. Do you have a HELOC? Are you using your HELOC or not using it? What do you think about HELOC activity increasing so rapidly here that we're going to get into in this video? Because there's a lot of concern about the economy as a whole, especially the housing market, and there's a lot of concern out there that people are using this so-called equity in their homes that they just bought a year ago and treating them as ATM machines. So let me know in the comment section down below what you think. Now onto the video. So obviously within the last few years, a lot of homeowners took advantage of the all-time low interest rates that were going on and refinanced their homes to a super low rate, as well as cashed out on newfound equity. But now that mortgage rates are above 7%, who in their right mind is refinancing right now? So this is where the HELOC comes in, or the home equity line of credit. I've gone over in previous videos what a home equity line of credit is, as well as how to apply for one and what to use them for and not use them for, among other things. So if you haven't watched those yet, I definitely recommend you check them out after watching this video. I'll put a link in the description box down below, as well as up in the corner to the entire playlist. Definitely check those out. But basically, a HELOC allows you as a homeowner to access the newfound equity in your home without losing that juicy low interest rate that you may have, as well as avoiding closing costs almost completely. And it doesn't even cost you anything at all in interest unless you actually take money out of the line of credit. So a HELOC, as you could understand, could be a very efficient and effective source of funding if you need it, as long as you're responsible. But with inflation eating away everyone's paychecks by the day, it could be very easy to be irresponsible with that newfound access to equity. And frankly, that's the concern as of right now, because home equity line of credit lending is at its highest level in 15 years, going back to 2007, and we all know what happened the year after in 2008. During the first 2 quarters of 2022, loan originators originated 807,000 new HELOCs, totaling $131 billion. This is up 30% from the same time last year in 2021. I believe this is happening for a few different reasons. Number one, inflation. Inflation is eating everyone's paychecks as well as their savings. And there's a lot of distressed homeowners out there taking their equity and using it on bills just to get by. This is especially true after the last few years where money was everywhere. Everyone was flooded with money and buying all these sorts of things that frankly they couldn't afford, whether it's a new home, a second home, a car, what have you. Once the gravy train stops, like it has, I could see a lot of homeowners being caught with a much higher monthly nut to cover that they frankly can't cover, that can't afford it. So instead of scaling back and living within or below their means, they go into debt. Take a look at this. The savings rate currently for U.S. households is now down to 3.1%. That's its lowest level since 2005. So you have HELOC usage going up, actual home values going down, and personal savings rates going down substantially as well. Does this sound like a strong financial situation to you? I didn't think so. Number two, many homeowners probably wanted access to equity in their home before they lose it or it's severely diminished. Frankly, I was one of these homeowners. I keep a very low or zero HELOC balance on my line of credit, and in a previous video, I actually showed you my specific monthly statement, as well as how the interest payments work and how they're calculated based on that statement. So if you have any interest or questions about how interest payments and payments in general work on a HELOC, definitely check that out. I'll put it up in the corner as well as in the description box down below. Now, for these homeowners, I could see it being frankly useful if they are trying to maybe consolidate some other debt that they have, like credit card debt or any sort of other debt where the interest rate will be higher than the home equity line of credit. Also, I think this includes a lot of real estate investors who saw the writing on the wall in regards to the housing market taking a turn and quick access to capital in order to jump on a deal where short-term funding is needed. So what does this mean for you? As you already know, I'm a huge proponent of the HELOC that's used responsibly. It could be an excellent source of capital capital in regards to investing. But the key word is short term. I would not take any money out of a HELOC, a line of credit, if you don't have a plan to pay it back, and quickly. It's very easy to get sucked in on using a HELOC for living expenses, especially when the rate is like 3 or 3.5%. But it's very important to understand that a home equity line of credit is a variable interest rate product. So the interest rate changes directly with the federal funds rate and prime rate, and it has gone up substantially. In fact, many home equity line of credits, you're paying well over 8% at this point, and it's only going higher. And if you're not smart and responsible with this, you can find yourself underwater very quickly. A home equity line of credit can also be efficiently used in order to consolidate debt, as I previously talked about. But you need to be responsible and diligent paying it down. A HELOC is not a get out of debt free card. If you owe $30,000 on credit card debt and you transfer it to a home equity line of credit, pay it back as soon as you possibly can. You need to be diligent and responsible. Don't just simply make interest-only payments and continue to live the lifestyle that's above your means. That is a complete recipe for disaster. That's what it comes down to, you guys. Live below your means. Now's not the time to put on a new deck on your house or use the HELOC for a new car because you may deserve it. And if you're one of those distressed homeowners that can't keep up with the monthly payments of your house anymore, instead of going to get a HELOC and robbing from Peter to pay Paul, or whatever that saying is, I would honestly consider selling your house while you still have equity in it and moving to a different location that's more affordable for you and your family. I know it's easier said than done, but you got to do what you got to do. That is it for today, guys. Thank you so much for tuning in. Let me know what you think in the comment section down below. As I stated earlier, do you have a HELOC? What are you using for, or are you not using it? What do you think people are doing with their lines of credit? Like I said, the first 2 quarters of 2022, there's over 800,000 new lines of credit. Do you trust these homeowners to use that equity responsibly, or do you think this is a recipe for disaster and we're going down a very bad path heading into 2023? Let me know in the comment section, and I will see you next time.